Welcome, everybody. Merrill Chandler here, your host of the Get Fundable podcast and your guide to the fundability universe. In this episode, I'm so excited because you've heard me talk about business credit posers. You've heard me talk about people who operators out there who kind of have gray lines between business credit, personal credit, etc. So I call this whole environment. We're going to be talking in this episode about catfish credit, what catfish credit means, how somebody is posing like something else in order to build a deceptive relationship with you. When we get back, we're going to be talking about how to not get catfished when you're looking for business credit. We'll be right back.
In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
All right, everybody, welcome back. All right, just like you heard in the introduction, catfish credit. Are you kidding me? You know what catfishing is, right? Catfishing is when someone uses an online presence or an identity and they use it for the purpose of beginning a deceptive relationship. It's usually in the dating world or relationship building. Somebody puts up a better looking picture than they actually are, and they start building a relationship with someone. That's called catfishing. Well, guess what? That exact same behavior is also happening in the business credit world, right? The business credit universe has people who are catfishing you for credit. Now, we've used the term business credit posers before, right? But let's think of it as catfish credit. This definition, I love this definition. Credit offers designed to manipulate someone who is seeking business credit into beginning a relationship based on deceptive or false premises. Think about that. Credit offers designed to manipulate you who are seeking business credit into beginning a relationship based on a deceptive or false premises. So let's take a look at some of these deceptive practices. And there's three different groups we're going to take a look at. The first are lenders. So how do lenders catfish you into a deceptive relationship? Well, catfish credit deception number one is when lenders offer business credit to unsuspecting borrowers and then report the balances monthly to your personal profile. If you've listened to my boot camp, previous episodes of my podcast, this is horrendous, right? Now, who are examples of just this, of using this practice? Well, Capital One reports their balances to your personal. Discover It card, which is a business card, Discover It reports monthly balances to your personal profile. Elon Financial, Synchrony Bank, Web Bank, and there are others. Many tier 3 community banks or credit unions. They will say it's a business credit profile, and they will then report your balances of a credit line, credit card, or otherwise to your personal profile. That is deceptive practices. We think we're getting it for our business, and yet it's harming the balances and the utilization of our personal profile. So that is catfish credit example number one. Now, the negatives are these: they report to the balances report to your personal. So when you think you're being a good businessman, good businesswoman, a good entrepreneur, and you're putting balances on these credit cards, not knowing that it's harming your personal profile. So that negatively impacts your personal profile and score, negatively impacts your fundability, And most importantly, there's no opportunity to these different operators, these different lenders. It gives you no opportunity to leverage your relationship to have a deeper, more meaningful relationship. What I mean by that is just because there's a credit card, none of these operators offer a credit line, business loans, etc. And that's our goal. Fundability, especially for us, for entrepreneurs and real estate investors, fundability is about getting all the business credit that doesn't report to our personal. So that's catfish credit deception number one. Now, one of the telltale signs, what to watch for, is if any lender avoids answering this question: do these credit accounts report monthly to my personal credit profile? If they hem and haw to that question, if they say, yes, they do, or if they don't know the answer, you need to vet that. You need to get 3 of the same answer from 3 different people. Whether it's yes or no, it's got to be 3 different answers or 3 of the same answer, because we need to know whether or not they're reporting to your personal profile before you engage that particular credit instrument. Fair enough? All right. Let's look at deceptive practice number 2, credit card stackers. Well, catfishing, credit card stacking is when a business implies they can help you get credit for your business. If you could see me right now, those are on our YouTube and our podcast channel, the video version, I'm using air quotes. Those of you just listening, just notice the air quotes in the audio. I'm air quoting get credit for your business or get financing for your business. If you hear them say those types of things, they're not saying we're going to get you business lines of credit. They're not saying we're going to get you business loans, right? They're likely going to get you personal credit cards that ruin your personal fundability whenever they are used. That's what credit card stacking is. One of the most horrible versions of that was Seed Capital. Now, they were shut down by and fined by the FTC for fraudulent business practices because they used the language help you get credit for your business or help you get financing for your business. Be careful of what you're looking for. Now, what to watch out for, you guys, is the same thing I asked before. Do any of these credit accounts report monthly to my personal credit profile? If they don't answer that clearly with a no, they don't, and you get that same answer 3 times for 3 different people, run. Do not work with that outfit. All right. Now, deception. And now the negative impact, of course, is since personal credit cards that are being used for your business are being reported to monthly to your personal profile, it's negatively impacting your profile, your score, your fundability, etc. And since they're not true business credit cards or credit lines or business loans or commercial loans, you're not building a relationship with any of these banks, right? So all bad juju. Now, the last deceptive practice are with business credit builders. Again, I'm using air quotes. Business credit builders. So what is the catfish credit version of this? When a business credit builder says that they can help get credit for your business with no personal guarantee, but somewhere in there, they're implying that some of their credit approvals will be bank cash equivalent business loans and lines of credit. Many people are deceptive about this. These operators will, on one line, they'll say no credit with your EIN and get a credit line without your EIN. But what they're referring to are fintechs, or cabbages, or SoFi loans that may not report to your personal profile, but they're high cost. They could be 27 or 36% per year in financing. Technically, they're a credit line, but they're not the bank cash equivalent, right? They're not a Chase or Wells, PNC, BB&T. They're not one of the that's currently somewhere between 4 and 5% interest. So watch what the implication is. If they say we can get you credit lines, ask them, are these are these national bank credit lines. Ask them, what types of credit lines are they? If you do not hear top tier bank credit lines, not credit cards, but credit lines, if you do not hear, when you ask these questions, if you do not hear bank equivalent or bank cash equivalent, meaning you can use it like cash. It's not a credit line at Uline or Granger or one of these supply stores or industrial supply. You're looking for now, if they say, yes, we can help you get business loans and lines of credit from top tier banks as low as 4 to 5% interest currently, keep talking to them. I believe we're the only game in town who does that. But most of these business credit builders want to help you get business credit, but the business credit aren't going to be non-PG. You have to personally guarantee every cash account that you take out for these top tier credit cards, credit lines, and business loans. Now, so things to watch out for is that there are groups out there like eCredible. eCredible will report, in order to build business credit, they're actually getting you vendor credit, and they're reporting your utility bill, your internet bill, your cell phone bill. And well, we say that on the personal side, guys. Is Chase going to give you a $50,000, $100,000 business line of credit based on your Home Depot reputation? Well, are they going to use your utility bill to help qualify? No. Are they going to use your internet provider service? No, they're not. They're going to look for like kind lending, right? They want to see the top tier business credit accounts to see how you perform in top tier business credit accounts. All right. Another one to watch for, Dun & Bradstreet offers a service that's called a Business Credit Builder Plus. You'd want to be careful because they're only building a business credit score, and that business credit score is just like on the personal side. What is that business credit score based on? What's the quality of the accounts in the profile? If they are little vendor or trade accounts, it's not going to help you get approved from Chase or Wells or any of the top tier 1 or tier 2 accounts. Do you see what I'm saying here? They're going to lend to lenders that are on your business credit profile that they trust, not the little warehouse accounts and things like that. All right. So another example is like nav.com does the same thing. You want to make sure that you are building credit with credible accounts that cash lenders like top tier banks, those credit lines, business loans, and business credit cards, they're looking for a high value, distinguished accounts, not little tiny, like I said, merchant or vendor accounts or retail accounts, right? So when business credit builders say they can get credit for your business with no personal guarantee, I'm telling you right now that, to my awareness, I would love somebody to show me differently. But I have not seen since 2008 cash credit cards, meaning top tier bank credit cards that you can use like cash, business credit lines, and business loans from top tier banks without a personal guarantee. Haven't seen it since 2008. If you know of anybody, please get in contact with me, and I would love to see how to expand this, because I don't want to downplay people who are succeeding at getting real live business credit that from top tier banks, right? Unsecured, but these cash equivalent lines are all going to be personally guaranteed. So if they imply they can get you those because they're not going to say it outright. They're going to imply, yeah, we can get you credit lines that don't report to your personal. Well, it's not going to be bank, tier 1, tier 2 bank credit lines, credit cards, and loans. It's not going to be that. So that means they're implying something else. Ask the questions, vet those banks until you have the truth from 3 different people. Now, what you need to watch out for is if anyone mentions the phrase build business credit, that's when you got to start. You got to watch out. You have to watch out because you might be headed for danger unless you ask these important questions as we've reviewed them here. So there are 3 different types of 3 different categories of business credit. There's merchandise credit, which is these kind of low value trade lines, vendor lines, things like that. There's commercial credit. And by and large, the vast majority of commercial credit has nothing to do with your personal credit, but it also requires $1 million minimum in annual revenues and $3 million in $3 million in annual revenue and $1 million request for funding, right? They won't do anything under $1 million. Where we focus, where Get Fundable and Credit Sense, where we focus is small business credit, business credit cards, business credit lines, and business loans that are personally guaranteed by you, but they are unsecured. And the vast majority of them are stated income, meaning it's just a single application like a credit card. You can use them like like cash equivalents, and they are top tier, but they require a personal guarantee. This is Merrill Chandler. Love these deep dives, you guys. Like, love, share. Send this to somebody that you know or who needs to be able to cross the T's and dot the I's so that they know the questions to ask into these operators. I'm not here to disparage anybody. I just want you to know the truth, and I want you to be able to have the power to ask the right questions so you know what you're getting into.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you gotta tell your friends about this podcast because we want them to get fundable too.